Hello and welcome to the January 2025 Buy-to-Let Mortgage Market Update. My name is Richard Pennell from the Mortgage Home, and we are your buy-to-let mortgage experts. Let me tell you what we've got in store for you in this month's update. Well, the first thing, and I did talk about it in December, there's some big changes to how you're going to receive your updates. So if you're enjoying the content that we deliver to you each month, then please just take a few moments to understand what's changing and how you will continue to seamlessly get your updates from February onwards, because this is the last month you'll be getting your email notifications. As a result of that, or a byproduct of that, you'll get access to a free landlord library. Now, I believe that it is the largest mortgage educational content in the UK, and we're putting that all on our channel free for whether you're clients, you're not clients, you just pass through our way from time to time, then it's there for you. I really want you to get some value out of it. So that's really exciting from our side, and hopefully you'll see some value in it too. Now, as always, what's happening with rates? Really volatile start to the year, so you will want to just spend 5 minutes bringing yourself up to speed with what's going on with the markets. So that's our bread and butter. Now, the Renters Reform Bill. Normally, I will only talk about stuff that's got a pound sign attached to it, something to do with mortgages, finance. But indirectly, of course, the Renters Reform Bill, it's really close to being enacted now. And so as a portfolio landlord, I'm extremely interested in what's going on. And what I've done is summarized it. It's currently a 200-page document, and I've turned it into one slide for 5 minutes so you can get a heads up as to some of the major headlines with the Renters Reform Bill, because I can assure you, if you have a buy-to-let property with a tenant on an AST, it will affect you. So if you don't know much about it, please dial into that piece of content. And then finally, we always do a little something about life insurance. If you or you know somebody who has never been able to get life insurance because they've got a medical condition that's so severe, or they've had some medical history that is prohibitive, and it means that the life insurance company will not cover them, then fear no more, because we've got a product now that we can offer and advise on that will ensure that you are guaranteed to be covered. So if legacy and making sure that your spouse, partner, loved one has some financial benefit when you're no longer here, then please dial into that piece of content, and we'll tell you all about that and how it works. So let's get on with the show. So how you access us is absolutely changing. January is the last month you're going to be getting that email update in your inbox, where you get that link within the email that then takes you to our YouTube channel, and you watch the video there. So from February, we're going to be uploading the videos directly to YouTube. So you need to subscribe. So as you're watching this update right now, I'm guessing somewhere around the video is a button with a bell on it that says subscribe. If you haven't done it, please just click on that subscription button right now. That means every single time we upload some mortgage content, you'll get a notification on your phone, and you can then jump in and watch it at your leisure. Now, linked to that, we've got a little bit of feedback for some of you guys. And of course, right now, I'm doing this monthly update. So you get one large chunk of content. Could be 30, maybe even 40 minutes in length. And in today's world, that's a long piece of time. And of course, there's a range of subjects within that, and some are more relevant than others. So we're now, from February, going to weekly pieces of content. So smaller bite-sized chunks, 5, 6, 7 minutes, usually on one subject matter, possibly two if there's something of a burning issue. But you can then get that notification as long as you've subscribed. Have a look at what the subject heading is, and you can choose to jump in or not to avail yourself of that piece of content. So we're trying to adapt and change to you guys and your needs, and hopefully that'll be welcome. Although if you've got any comments, please put it in there below. We always look at the comments, and we want to obviously keep evolving and being relevant to you guys. Now, linked to that, Once you're on the YouTube channel, excuse me, what you'll see on there is what I believe is the largest mortgage educational library in the UK. Over the last 5 years that I've been doing this, we've amassed around 160 bite-sized pieces of mortgage educational content about the whole wide range of subjects under that banner of buy-to-let finance. And now we've put it all in as a one-stop shop. I don't care whether you're a client of ours or not. What I don't want them is to become something that rusts in the background, not getting used. And I just want as many landlords to get as much value out of this as possible. So I want to really quickly just stop sharing this initial screen and show you really for 30 seconds just how that works. So that's what the Mortgage Home channel looks like. And as you can see, I'm already subscribed. So if not, once you're on the channel, you can subscribe as well. But as I said, hopefully there's a subscription button right now as you're listening and watching me. So please subscribe to that. Once you're on the channel, if you see we've got these three little tabs, home, video, playlists. If you click on video, initially it will list all 160 videos, and I've got it in date order. So where it highlighted in black, it's got latest, so it's doing it in from current day backwards. But here's the real interesting thing for you guys. If you've got a burning question, query, a topic that you want to look at some video on, let's say you want to look at holiday let mortgages, then you just type in the search field holiday let, and you'll get the video content that we've got on holiday lets. If you're an expat and you want expat mortgages, then again, put that keyword in the search field and it'll bring up videos that are relevant to you. So that's how you can access really succinctly all the relevant content to hopefully answer your questions. And if when you're doing this, you find that there are certain subjects that are not covered or not covered in enough detail, please just put some comments out there. And I'd be keen to then put them on the list. And as soon as I can, we'll do some relevant, up-to-date content on those topics that you guys are particularly interested in or want a little bit more meat on the bone. So I'm really excited to share that with you. That's up there. That's live right now. So please share that with your colleagues. You've got other landlords that are out there. There's no small print to that. You don't have to pay any monthly fees for that. It is completely and utterly free for you guys to use. So I hope you will enjoy that. In this piece, I want to talk about what's going on in the markets right now. Wow, really volatile. But first of all, I want to get my crystal ball out and give you my predictions on 2025. What is likely to happen? What does a year look like? Well, if we were to ask Andrew Bailey, who's the governor of the Bank of England, he would have, and he has said in his some of his recent speeches, certainly towards the end of 2024, that he anticipated approximately 4 rate reductions in 2025. Now, if we assume that those rate reductions are 0.25% at a time, then we're going to have a 1% reduction by the end of 2025. However, the markets have got a different view. Right now, there's a lot of volatility, there's a lot of uncertainty, not least because of Rachel Reeves' budget and the implications of that, and the amount now of debt that we have to fund the spending plans and the cost of debt. My word, listen, if you think you've got a car loan with a high interest rate and you're paying slightly over the odds, then I'm not saying feel sorry for the government, but their hike in interest payments for their debt repayment, we're now talking in additional billions. So here's the thing. What the impact is in terms of lenders and the wholesale rates is that swap rates are starting to rise. Again, I'm not trying to send any ripples of negativity out here. The rises are quite modest. And right now we don't expect it to change, but we've got Donald Trump coming in. We really don't know what's going to happen there, and the markets are extremely mindful of that. We've got inflation that's going to continue to rise, 2.6% now. It will go over 3% by the end of the year. We've got the energy cap rising in April. That will have a direct and significant impact on inflation. So there's a lot going on that's not really helping to give confidence and certainty to the market. So given that volatility, given then that translates through into swap rates, certainly at best hovering, and if anything, slight increases. And if lenders are passing on that increase, we are talking about 0.1, maybe a 0.2 increase in mortgage rates. So in terms of what's happening there with mortgage rates, I don't expect any of them to drop right now. So if you are sat on your hands because you've got 3, 4, 5 months to go before your current deal ends, and I did hint at this in December's update, I would get off the fence. Lock in with your current lender a product transfer right now as one option, and you can park that. And if that turns out to be the best option, because in 3, 4 months rates have actually incrementally increased, you'll be delighted you've got your ducks lined up early and sorted that out. If you leave it till last minute, right now it's looking like rates are slightly going in the wrong direction. Hopefully it'll settle down and they'll start to drop. So even if the Bank of England do put rates down at the beginning of February, I don't see lenders, rushing to follow suit. I mean, lenders could, notwithstanding everything I've said, choose to drop rates and actually take a hit on their margins. And I've seen them do that this time last year. They did exactly that. But there's no hint they're going to do that. I think with the pressure of the stamp duty change coming along, there's increased natural demand anyway, certainly from the first-time buyer market. And so I don't see lenders chasing additional business. I don't think they believe that there's lots of additional business and they don't have to sacrifice profits just yet. Hopefully, that will change, and I'll let you know as soon as that happens. But right now, there's a lot of stagnation and, if anything, a slight marginal increase on the rate. So please make your decisions now to lock in for that next deal. Sooner than later would be my watchword and takeaway message. In this piece, I want to talk about the Renters Reform Bill. It feels like it's been around forever. The Tories were first running with it. They were going to put it into legislation until they get kicked out. And then Angela Rayner's taken over. She's picked the ball up and she's absolutely running with it. Why am I talking about it? Well, although directly there's nothing in it financial, the implications for you landlords clearly will be financial. There could be issues about void pays. There could be issues about your rent that you can charge. The issues around the type of tenancy and length of tenancy that you're going to have. There's things around compensation I want to talk about. There's a whole range of changes that are imminent that will clearly hit you landlords in the pocket. And so to be forewarned, to be forearmed, I'm a portfolio landlord, so I am going through with a fine-tooth comb this 200-page document that's currently out there. It was issued last week. It's already had its third reading. So the reason I'm choosing now is that this bill is about to go to the Lords. I don't expect any major contention from the Lords, so I would expect it to be enacted fairly soon. So if you've not taken much notice of the Renters Reform Bill, because as I said, it feels like it's just something that goes on in the background, then really please take a few minutes to listen to this piece of content, because I'm just going to give you some real simple headlines to whet your appetite. And what I'll do is once the Renters Reform Bill is enacted, maybe I'll come back. There might be some tweaks from the government before it goes live, but I think we're pretty much there. So let's go through it. First of all, the tenancy that we all know and have got used to for the last 20 odd years, the AST tenancy, whether that be a 6 months, a 12 months, perhaps you love a 2-year tenancy. You get that commitment from the tenant, don't you? You know where you are. You know you've got that income in for at least 6, 12 months or perhaps 2 years. That's going in the bin. There's no such thing now as a fixed term when it comes to tenancies. There is moving to what are called periodics. So in other words, they're simply a rolling contract you have with your tenant, where either side, either landlord or tenant, gives each other notice to quit and off you go. So that's a massive, massive change for landlords. So really be aware of that, particularly if you're doing your own tenancies. Then of course the whole document, the whole template will need to be changed once this goes live. Now, rent rises. Of course, we know as landlords that rents have been really trying to play catch up simply because of the exponential increase in mortgage rates of the last 2 years. So landlords, I'd say on average, interest rates, rents have been going up at, in double digits for the last 2 years. But in the bill, there will now be an opportunity for tenants to challenge that rent rise in a way that's not been as simple for them historically. So as a landlord, you really should be really mindful of what those rental increases, when you're about to write a letter to the tenant saying the rent's going up from X to Y, that you're not trying to push that envelope a little too far, because it's going to be a simpler mechanism for a tenant to challenge that. Now, here's the thing, because when challenged, it's going to go to some form of arbitration or that will not only look at what the rate rise that you're looking to do, but here's the worst case for a landlord. Here's the worst case, and this is important. Not only could the arbitrators assess the rent increase and decide that that's too much, they could say that the current rent you're charging is too much and force you to reduce the rent you're currently charging to your tenant. So be really mindful of rattling that cage and pushing that rent up too much. That would be my advice as a landlord. Try and be streetwise about it. Don't be overly greedy and be almost forcing the tenants to challenge that rent rise. Now, grounds for possession. This is at the heart of the Renters Reform Bill. Fundamentally, what is going to be kicked into the long grass and essentially outlawed is repossessing a property without any grounds whatsoever. So right now in January 2025, we can give notice to a tenant, but give absolutely no reason. That is going. That's called the Section 21 notice. That is going. It's getting torn up. Now, there's always also been a Section 8 notice, because if you had a particular grounds for repossession, the obvious one, rent arrears, maybe it's antisocial behavior, maybe it's damage to the property. You've always had a box you could tick and put on that Section 8. This is why I'm kicking the tenants out and repossessing the property. And that will be acceptable under the courts as long as you could prove that. Now, the new Section 8 is widening. There's more reasons that us as landlords can use to possess the property. So, as a landlord, I actually think, yes, Section 21's going, but on the other hand, the new Section 8 feels quite fair to me. And to give you a little bit of a heads up, let's say you wanted to sell the property. So that will now become a valid reason that you can put on your Section 8 to repossess the property. It might be that you want to move into the property, or family members want to move into the property. That again will be a valid reason under Section 8. And finally, it might be that you've got work to do to the property. And as such, the tenants can no longer be in there because the works are quite significant. So again, Section 8 would allow you to give notice to your tenants and you can do the work. And I remember I talked about EPCs. Yeah, they're still a long way away, but once the grade C of an EPC comes in, then it might be that there's work that needs to be done to the property to get it from where it is now up to a class C. And you might think, well, how am I going to get my tenants out? Well, under the new Section 8 rules, you'll be able to give notice to your tenants, get the work done, and then you can advertise new tenants coming back in. Now, compensation. This is a word that's going to strike fear through many landlords, isn't it? It's not a good thing when you see that word. So compensation will be something now that it's in the bill. I'm sure it's here to stay. So tenants will be able to demand compensation for either loss or inconvenience. Now, you might say, what on earth does that mean? And of course, the devil's in the detail. There's a few examples, but we may have to wait and see. But here's one example. Let's say the tenant has asked you to undertake some repairs and you've dragged your feet and you've just not done it. And it's caused inconvenience. It's caused hassle. It's caused an issue to your tenants. It might be that the tenants decide to take you through a process that means that you'll be forced as a landlord to pay some compensation. So this is just one of a number of examples, but really be mindful now about the relationship you've got with your tenants, how fair you are with your tenants, because they will have now on their side this opportunity to go for compensation if they think, and it is backed up, that a landlord is being unfair. And so, that's something that we should really be mindful of. Now, finally, we've probably all seen it. Maybe we've done it ourselves, that when we put an advert out for potential tenants, we may have put in that advert, we do not want tenants who are currently on any sort of benefits, or we might say no DSS, because we want to focus on a particular tenant category. Well, that's seen as discrimination in the new world, and that will be outlawed. So there'll be no way you can put on your advertisements that you do not want anyone on DSS or any form of benefit. So again, if you are managing your own properties, then please be mindful of that. So lots and lots of changes out there with the Renters Reform Bill. I hope that headline summary has been of use. And as I said, once it's come back from the House of Lords, and I expect it to go through the Commons now with very little future amendments. But if there is any, I'll pick up on it, I'll summarise in it, and I'll get it out to you guys. So I hope that's been of use to you today. In this section, I want to talk about life insurance where you will be guaranteed to be covered by the insurance company. So please, I hope your ears prick up if you or you've had a family member who has struggled to get the life insurance companies to accept your application. Now, it might be that you've got some form of serious medical condition right now, or perhaps historically you've had some serious medical condition that means that it's been prohibited. It's prevented you from getting cover. Because if you've been through this process before, and as an advisor, I've been on the other end where I've asked, it could be 100, and what can be quite intrusive questions about your medical condition and historically your medical situation that ultimately informs the insurance company about whether they deem you're worthy enough to be covered by them. So massive new change in this type of policy, in that you'll be guaranteed to be covered because the insurance company does not even ask you about your medical history. They don't care. They clearly take a view, they price it accordingly, and therefore you know that you're going to be covered. Now, these types of policies, you're probably not going to be getting hundreds and hundreds of thousands of pounds worth of cover. But if it's important to you to leave some form of legacy, you want to make sure that your spouse, your partner, your kids, whatever, your loved ones have a lump sum to do something with. And right now, that's a gap. In 2025, you've not been able to put that into place to give you some peace of mind, then things are about to change, because there's these policies out there now that as a company we do advise on, and we can get you that policy and get you covered. Let me just take you through some of the headlines if that's of interest to you. So here's the rules. First of all, you've got to be over 50 years of age. Usually everything's about the young kids. Now you've got to be over 50 to be eligible for this type of policy. Now, here's the thing about this policy that I hope you'll understand. It will not pay out if you were, sadly, to die in year one of the policy. Look, this is to stop abuse of this type of policy, because, look, let's say you did have a real serious illness, as far as to say it's a terminal illness. Well, why wouldn't you take out a policy if you've got a life expectancy of weeks or months, and it's now going to pay out a lump sum to your family? Of course, you just take it out. But, you know, the insurance companies want to obviously stop that abuse. So in year one, there's no payout. Now, look, they're not trying to get premiums for the sake of it. So here's the thing that they do. That if for some reason you were to pass away in year one of the policy, they would reimburse 100% of the premiums to your family or into your estate. They're not looking to profiteer from people's suffering, and if they were very unfortunate to pass away in that first year. From year two onwards, the policy is essentially fully live and can be fully claimed upon by your estate, your family, your executors. As I said earlier, absolutely no medical. Those 100 intrusive, extremely personal questions about your lifestyle, whether you've taken drugs in the past, what your what your height, your weight is, your BMI, sexual preferences, orientation, all asked on a normal life insurance is not asked for going forward. So it's a lot smoother, it's a lot quicker process. And here's the beauty of this thing. The premiums will never change. So once you're offered a policy, and let's say it's £30 a month, that £30 a month will never, ever go up. Now, think of any other expense you have going out of your bank account, whether it's gas, electric, water, council tax, food, broadband, telephone bills. We all know they're going to go up every year. We expect them to go up every year. But with this, it stays the same. So over time, your premiums will actually feel even cheaper as a result of that. And as I said, it's guaranteed to pay out. So unlike what I would call a normal life insurance policy, where it tends to have an end date, that might be, I'll have this life insurance cover up to the age of 60, 65, 70, up to a retirement age. That's not unusual. Maybe perhaps to pay a mortgage off, and by that point the mortgage is gone anyway, so maybe I don't need the life insurance. But with this, the policy just keeps rolling on. So you know, and this is real peace of mind, you know it is going to pay out. Your family will get that 10, 20, 30, 50,000 pounds, you know, and that piece of legacy is guaranteed. And that's something I really love about these sort of policies. So my takeaway message is, look, if that has just piqued your interest, you want to know some more about it, how does it work in a little bit more detail, then below this video, we've got various ways of contacting the office. And one of those is just a link to our diary. Speak to or make an appointment with Yvonne, who's our insurance advisor, and she'll just share some more information with you, maybe personalize it a little bit more, and just give you enough to make a decision about whether that is right for you. And finally, this is our last slide. As always, this is how you contact the company. If you want to give the office a call, just have a chat through, you're more than welcome. If it's something a little bit more complicated, or not sure just whether to make an appointment. If you want something really urgent, maybe you've had an offer accepted and there doesn't appear to be any openings in the calendar for a few weeks, because sometimes we get really busy. Give the office a call. we'll absolutely move heaven and earth to get an appointment for you in the next 24 to 48 hours, because we don't want you to miss out if you've had an offer accepted on the property or cause any undue pressure. So there you go. If you want to take a quick snapshot of that, you can. Other than that, thank you so much for watching. As I said, please subscribe to the channel, because from February, you'll not be getting those email updates. We're going straight to YouTube. And so if you subscribe, you get the notifications. And for you, it'll be business as usual. See you on the next update.